Hi, you're watching ET Markets Live. I'm Neha Vashisht. Welcome to a brand new episode of ET Commodity Talk, where we talk all about commodities and much more. I'm here with Anindya Banerjee, Senior VP, Head of Research, Currency, Commodities, and Interest Rate, Kotak Securities, with me today to discuss more. Thank you so much, Anindya, for taking out time and joining us today on ET Markets Live.
Thank you for having me. A very good afternoon to all.
So, Alinda, let's get to what's happening in the commodity markets right now. Let's first start with gold to silver ratio, which is approximately around 60 as of Jan 2026. What does it say about both the commodities, how to look at these two in the next 3 to 6 months, and basically what to expect?
Right. See, basically, the gold to silver ratio operated within a broad range of, I would say, 60 to 100 on the up. When things became
Hmm.
bad for the world economy, gold outperformed silver, vice
Right.
versa. But there has been a structural shift in the way silver is being viewed over the past, I would say, half a decade, because
Hmm.
as the whole global economy has become more digitized, and now the way we are getting powered by AI. So everything to do with electronics, AI, data centers, the new
Hmm.
economy sectors like the EVs, the solar panels, it all
Yeah.
requires silver in large quantity. But unfortunately, because of very low prices for decades and under
Hmm.
investments, what has happened is we don't have the supplies in place to meet that kind of demand. And these are
Hmm.
industrial sectors, and these are critical sectors for any major economy in the world. That's the reason why silver is uh, being labeled as a critical mineral by various countries around the world, from US to China to everybody else. Now,
Hmm.
and also once silver is used in a particular kind of end product, be it a solar panel or etc., it is not easy to recover it back. Means the
Yeah.
recyclability of the metal is low. So we are at a stage where for the last 5 years we are in a deficit market, and unless and
Hmm.
until the demand for the new economy sectors, the electricals, the electronics goes down due to a severe global recession, the demand
Hmm.
for silver is expected to rise in the next 4 to 5 years, and the supply won't be enough to meet, because large part of this silver, 70 to 80% comes from as a byproduct, be it copper,
Hmm.
be it zinc, be it gold, etc. So it is not the price of silver which can decide the new mining activity. It has to be other
Yeah.
commodities as well, right? So that's why the
Hmm.
price elasticity of silver is low. So which means this gold silver ratio should ideally structurally shift downwards. It may
Okay.
not happen in a month's time, but if you're looking at a 3 to 4 years, we could see a significant shift in this ratio from current 60 towards 40 or even 30 levels. And in fact, we had seen 30 in 2011 when the dynamics of silver fundamentally was not
Hmm.
so compelling. Then it was a speculative
Hmm.
move, happened in 2011. But then
Yeah.
also we had seen the ratio drop somewhere in the high 30s. Uh,
Hmm.
we think that over the coming quarters and a couple of years, we could see a structural decline, of further decline in the ratio towards the level of 40. But
Okay.
during times when there is a big sell-off in the equity markets, risk-off environment, gold will outperform silver because safe haven outperforms industrial. But
Right.
overall structure, we are still bearish on the ratio.
Okay. And when it comes to prices, what is the stance on gold and silver for the next 3 to 6 months?
The stance is bullish because the overarching factors. If you take gold first, see
Hmm.
the whole aspect of de-dollarization. So there are three kinds of demands which we tend to see in the gold market: the consumption demand, which is basically
Hmm.
jewelry; then the diversification demand, the central banks diversifying from dollar assets,
Hmm.
institutions diversifying from financial assets, and the third is speculative. Now, the biggest driver of gold prices over the last 1 decade also has been this diversification pillar. First, central banks, now the institutions, because they
Hmm.
find themselves underinvested in gold as well as in silver. So we are seeing portfolio allocations happening. and then the speculators trying to profit from it, they tend to accentuate that move. So, what has actually transpired over the weekend? I think that will accelerate this diversification demand, because this is a clear indication of the multipolar world order which we were talking about. But the way US is handling itself, it is basically kind of creating major flashpoints around the world, and it is sort of junking the whole global rule book, and that can make people, especially the institutions, very nervous about holding their assets in the West and also assets in the dollar. So that can mean that we could see further diversification away from the dollar towards
Okay.
gold, towards silver, towards other hard metals, because
Hmm.
uh, naturally, the institutions, the central banks, and the governments who are outside the Western collective, they would like to diversify into an asset which the Western institutions don't have a control, which is hard metals, and they are also critical for your future industrialization needs. So, like how the confiscation of Russian assets in 2022 accelerated de-dollarization, I think what is now transpiring in Latin America, a whole rhetoric about Greenland, about Mexico, about Cuba, I think will only add more fuel to the fire of de-dollarization and accelerate the devaluation of the dollar against the hard metals, which is basically gold, silver, copper, and the other entire metal space. So yeah, so that is the structural trend. I think that can fuel the gold prices in the short term and also
Okay.
in the long term. Same goes for silver. Silver is an added advantage. It is, as I said, a largely
Hmm.
an industrial play along with monetary metal. So that, and the market is in a shortage. So silver prices can jump more, but gold prices looks also very compelling because they have come out of
Hmm.
1 month of consolidation. So we won't be surprised if gold heads to levels of 4,800 over the next 3 to 4 months in dollar terms
Okay.
spot. And
Hmm.
for silver, our next major target is $100.
All right. Let's also move to copper, which is one of the most important industrial metals out there. Copper is near record levels last week. In the last 10 days, actually, we've seen copper going up and up. What do you think about copper right now? What is happening with copper, and how much of this rally is fundamentals, and how much of it is speculative froth?
Yeah, that's an interesting question because, as I said, currently what we are seeing, this whole rally in the hard metal space, be it precious, be it ferrous, be it base, be it critical, is basically comprised of two set of factors. One is that, as I said, dollar is devaluing very rapidly against something which is outside the control of the Western collective, and also finite in supply and needed in major way in the upcoming industrialization of the world and the Asian countries. So that is hard metal space. So that factor is impacting all hard metals, but within that,
Hmm.
those metals which have a structural deficit story, like silver, like copper, those are, or example, even platinum, or to a certain extent, aluminium. So those are doing much better than others. So copper sits right at that right at the center of that narrative. It is kind of a silver of base metal story, and because
Hmm.
the no new major mines are expected over the next couple of years, and the kind
Hmm.
of mining activity, again, the underinvestment which has happened over the last 2 decades, is
Yeah.
basically keeping this, can ensure that the coming year 2026 and even possibly 2027, this market can
Hmm.
be in a deficit. And
All right.
because the demand is exactly coming from the same industries from where the silver demand is coming: electricals,
Hmm.
electronics, AI.
Yeah.
So those are
Semiconductors. Yes.
structural industries, the semiconductor industry. So those industries are not going to go away. It's not going to be industries which are going to get disrupted. They are in fact disrupting other industries. So
Absolutely.
copper has that structural story intact, but you will also see a speculative element from time to time, because there are a
Hmm.
lot of financial players in the market who are looking to play momentum. So they will accentuate the move on both sides. But the overall
Okay.
trajectory of copper continues to be bullish. As I said, first, the de-dollarization story and the loss of valuation of dollar against the hard
Hmm.
metals. Second, the structural deficit story of copper, which is intact for the next couple of years.
All right. Let's also talk about geopolitical risks right now. They are back on the radar with the US capturing Venezuela. Which commodity do you think will react first? Oil, gold, base metals, and why? And how can this affect commodities in the near term?
See, in this, I would say the hard metal space, again, as I said while answering the first two questions,
Hmm.
because that space is in short supply because of the years of underinvestment and the demand which is coming in
Yeah.
that, and oil is differently placed. In fact, if you look at all the various things what's happening with Russia, Ukraine, Iran, Israel, and now Latin American countries and US. So it will, over a period of time, bring in more supply of oil into the market, because once the
Hmm.
Russia Ukraine thing settles down, or Iran Israel settles down and Iran gets back into the world oil market officially, and so does
Hmm.
Russia, so more supply of oil is going to come. Venezuelan oil is still a far-fetched thing because decades of underinvestment has happened, and suddenly you cannot increase production from 1 million barrels to 5-6 million barrels a day, just like that.
Hmm.
So, but it does create that narrative of more supplies. So
Yeah.
oil can be in a bearish trajectory.
Hmm.
It is already doing that. It is slowly grinding lower. We expect that trend to continue. Uh, the WTI could head towards the levels of $50 or lower in 2026. And coming to the pick will be gold first, because it's a monetary diversification away from the dollar assets, as I said, or the dollar investments. And then it will be, of course, be a silver and copper, because apart from just monetary diversification, they are also a important element or a critical mineral for securing the future of a nation, because the industries in which it is used. So gold, silver, and copper.
All right. Let's also talk about from an India perspective, which commodities do you think could pose the biggest inflation risk over the next 3 to 6 months?
So for India being an energy importer, I would say oil and then gas, which are the two biggest risks which it can pose a risk. So which looks well contained. In fact, India will be one
Hmm.
of the beneficiaries of this emerging. Uh, I would say the emerging bearish trend in oil prices, and also to a certain extent in the gas prices as well. So India will be a big beneficiary of that. But if there is any fresh geopolitical flashpoint, it can trigger a spike in the oil prices, but those won't be sustainable. But as I said,
Hmm.
we are in a well supplied environment. A simple metric to understand that is how much of oil is already at sea. It is at a record
Hmm.
level. And the second metric is what is the non-OPEC supply growth expected in
All right.
2026 and 2027. That is expected to outstrip the total demand growth for the entire world. So means that OPEC is going to be in a spot of bother. So I don't see much of an inflationary risk from the commodity, the energy prices.
All right. Before we move to the levels for gold and silver for this week, um, if there's one commodity you would avoid at current levels, which one would it be and why? And also, you've already given your picks, but one commodity for 2026 for all type of investors, whether we talk about retail investors or commodity traders.
So I presume you mean to say as a buyer of that commodity
Yes,
to avoid.
yes, yes.
So as I said, I'm bearish on the energy market, especially oil.
Mhm.
So that is one commodity I would not like to do a long only trade. As far as
Okay.
the hard metal space is concerned, I'm quite bullish. Of course, within that, not every metal will do the same. So, but the oil, I'm bearish.
Okay. And your pick would be for 2026 would be gold.
Silver is first, then is gold, and third is copper, fourth aluminium.
All right. So let's get to the gold and silver levels. What levels to watch out for this week?
For this week, for gold, it will be the level of around 44.70. If that breaks,
Hmm.
we could see a retest of the all-time highs, which is around 45.50 on the spot dollar. And on silver, it's consolidating between 71 on the down
Hmm.
and around 78 on the up. This is a good
Okay.
consolidation because it had a straight run. It needs
Hmm.
if it is consolidate like this, I think then the next once it breaks out above the $80 mark ballpark, then the next level which comes into play is 95 to $100.
All right. And India, before we close, one last thing in one line, what would you suggest the investors who are trying to diversify their portfolios along with equity? So, what is the strategy they should follow for this year since this is our first commodity talk in 2026?
Right. See, I would suggest that a tripod strategy would be advisable. What do I mean by a tripod strategy? Is when somebody is
Hmm.
building an allocation to gold and silver, let's say through ETFs. So the ways to invest some portion at the current prices to prevent a FOMO kind of a issue. Then the another part can be done into a SIP, and the
Hmm.
third part can be left in case there is a big market fall due to, as I said, if there is an equity market, sharp equity market fall globally, gold and
Hmm.
silver will also be sold because of the margin call, like we saw in April last year.
Yeah.
So, in that case, the third portion can be deployed. So, first, invest some now, put rest into SIP, and finally put
Hmm.
some funds aside for a rainy day. If we have a big fall, then you can go in and deploy it lump sum. I think that should work.
Okay.
So people should focus much more on portfolio allocation this year
Hmm.
than focusing on individual runs, because volatility this year across everything can be very high.
Right. Well, this marks the end of our segment for today. Thank you so much, Anindya, for taking out time and joining us today on ET Markets live stream only on Commodity Talk. It was a pleasure talking to you.
Thank you for having me.
Thank you so much. Thank you, everyone, for joining us today.
Thank you.